All right, guys, good afternoon. Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. My apologies for running a little late. I was leaving the office, heading home to do this video. Traffic wasn't the best out there, so my apologies. But it is 5:14 Eastern Standard Time. Dow did close up about nearly 500 points. NASDAQ up 2.15%. S&P up 1.6%. The VIX did fall 3.61%, 2137. Equal weight S&P did slightly better than the regular S&P, 1.77%. Qs did gain 2.24%. We did hit QQQ calls today. IWM also gained as well. They were the laggard yesterday, up nearly 2%. Yields did not stop moving up, 2.913% as the bond bloodbath continues. 198 for the dollar index, up 0.20%. The real headline here is commodities taking a hit. Crude down 4.84%, 102.40 per barrel, 323.77 for gasoline futures, 4.16% down. Gold up down 1.72, 19.52 an ounce. Silver down 3.29%, 25.29 an ounce. Bitcoin did soar as well, with the NASDAQ up 1.56% on the future side, 41,335, and Ethereum 3,089, up 2.73%. As long as we're above that 3,000 level, that's really key. Really the headline you're probably saying to yourself is, Carlos, what happened today in the market? Why did we bounce? Well, the key level did break on the 50-day moving average. We talked about that. Right over here, we did close above that since second group closed, 44.09. That's your big level here, your 50-day moving average. So again, if you are thinking of going long, we talked about the 50 being the first level. 44.54 is your 50% retracement level. We did break above that. We came back below here after Netflix reported earnings. They're a big component, well, a bigger component of the QQQ NASDAQ 100. So really the next target you're looking for S&P, if you are long, really nothing has kind of changed in the sense you do have still the same kind of range between 43.71 and 44.54. Granted, a nice green day today, but really has anything really changed in terms of fundamentally? The only thing that's changed here is that we did get a headline from Fed voter Evans. I don't see the need for bigger than half-point rate hikes. I'm comfortable with rate hike path this year that includes 250 basis point hikes, gets rates to 2.25 to 2.5 by year end. So at least we have some Fed voters that have some kind of policy or some kind of roadmap where they don't think they need to be that aggressive. I think the market is really pricing in just Armageddon with rates. But again, as what he said right there, that's where we are in terms of rates slowing down, I guess, possibly in terms of the rate hikes. I think everyone was kind of expecting like 7 or 8 rate hikes. Again, we just need to see how it goes along. Every Fed meeting is live. So that's why CPI and PPI are so important. Let's go ahead and take a look now at Netflix's numbers. This is where it gets really ugly. Netflix closed $348 a share, down up 3.18%. But after hours bloodbath, now at really the lows, 257 at a share now. So let's go to stock. I'm going to go to Netflix stock. I want to see the percentage wise. It is now down to 26%. So I'll tweet that out right now. Wow. Really bad earnings from there. Here's the numbers. I'll go ahead and show you right here. Q1 EPS, $3.53. Did beat estimates though. Revenue did miss 7.87 billion versus 7.95 billion. This is where the market really hated it. Q1 streaming paid net change. This is subscribers. They lost 200,000 subscribers. They were expecting to gain 2.5 million subscribers. Sees Q2 EPS, this is their guidance, $3, estimated $3.02. They received a revenue of 8.05 billion, estimate of 8.23 billion. And then, I think I retweeted that already. Sees Q2 streaming net paid change, 2 million subscribers are going to be lost for the next quarter. That's the guidance. So really bad guidance, really bad earnings. Wow, Netflix just got taken to the woodshed. Here's where you are. So 258 now. Now you're probably thinking to yourself, well, Carlos, now what the hell do I do if I'm a shareholder of Netflix? Well, you don't even have to look at it here, is that you still believe in the streaming, you still believe them as a company to grow. So really what you're looking at here is back from 2020. Remember, we did have that COVID spike, but then as we had lockdowns, it got higher, but then we had that spike in November. So you can't really just put Netflix in that kind of the category of just, oh, it's a COVID pandemic winner. That's all they're good for. No, Netflix is still around. Obviously, they're still kind of the leader. Their studios are still has those Oscar-winning companies, Oscar-winning movies or documentaries or what have you. I own Netflix in my SPY-G ETF, which is one of my largest positions, but I don't own Netflix, the stock, outright. What I want to own it at these levels at 257, there is a gap to fill right here, right at 228.51. That's on the 2-year daily. That would possibly be, if I'm looking to go a little bit dumpster diving and I want to find some really good deals, possibly that might be it. Now, why do I say it's a good deal? Because that's where really the money is made. Money's made on buying cheap companies that pull back and then ride the wave. Again, you're always looking for a lower price when you are trying to buy, and you're always looking for a higher price when you're trying to sell. So I put 228.52. We're about 25, maybe $30 away from that. Again, not exactly impossible if we get there. But again, would I want to buy Netflix at that level? I think that wouldn't be a bad idea, technically speaking. I'd have to look at the fundamentals in terms of PE. PE will come back down, obviously, with this price move. Let's answer some questions. Sure brought a sweater to jury man. Come on. I did bring a sweater. I did. That's why I said I brought a sweater. I said that on Twitter. Thoughts on AMD filling the gap around 100. Now, AMD does have some legs. You can see it here on the, let's go ahead and bring up the hourly. And you can see that 94.20 level that we did break, which is a 23.6 fib on the daily. So now we are now at 96.93. If we get one more push, I think 4,500 S&P. If we can get 40 more handles, if we can get from S&P close 4,500, I think AMD does break 100. And I do love AMD. I do own shares. Netflix puts printing call it the entire way. Zach's words was Netflix is the weak of the FANG stocks. Well, Netflix is the weakest of the FANG stocks, but no, I didn't play puts on it, to be completely honest with you. What I did do with students today is that we did trade TQQQ, which is the triple leverage ETF for Qs. We caught that for I think 21% or so, or something like that. I think it was 21. And then what we did, we actually closed it ahead of the Netflix number. I thought, okay, if Netflix is really terrible, it's going to drag TQQ, so let's just go ahead and just take some profits here. But I did sell Netflix a long time ago. Nothing really against the company. I am a subscriber of Netflix, but again, I don't know what their plan is to do in terms of they want to increase double-digit growth and not lose any more subscribers. But what are they going to do? Are they just going to raise prices? Are they going to acquire something? Are they going to sell their company? I mean, hey, you never know. Maybe an Apple starts knocking on the door for Netflix at this valuation. Never know. You never know. I'm just saying. Does this complete the head and shoulders, inverse head and shoulders on S&P? Let's go do an Smp Spx. Would this complete the head and shoulder? Okay, so you have inverse head and shoulder. Yes. Would it complete it? No. Again, 4,500 is still my level. Technically, we are pretty much on that head and shoulders pretty evenly, actually. The question is, do we break 4,500 to continue higher, or is this a pivot and we get retest 43.83? So every day is almost a different market, which is unfortunate because that can get very old very quickly. Not a lot of continuation, and in the summer we may get that as well. So you have to be extremely nimble. This is where opportunities are there in a very short order, where you just have to kind of get in and get out. Thoughts on Disney? I do love Disney in terms of the parks. They're not just a streaming company, but I know now the stock is down because of the streaming things with Netflix. I can't really give you anecdotal evidence on people trying to close their Disney Plus versus their Netflix. I mean, I own both, but I have a bundle, ESPN Plus, Hulu, and Disney Plus. I think it's a great value, but I'm a big Disney guy. I own shares. So what I buy at this level, I have an alert down here at 116.31. That gets you back down to retrace the October boost from that earnings. So if we can retrace there, I think I want to load up on some more Disney. There's tons of demand at those parks. My wife was trying to sign up for a marathon. She did a marathon a couple of weeks ago at Animal Kingdom. She wanted to do another one. And it's kind of like the sneakers app on Nike. You just have to wait in line. And usually that kind of demand, look at Nike, how they did with their earnings. Again, I like the story that, again, Disney is just not a streaming company. Yes, Netflix, unless they open a Netflix land somewhere, I think they're way behind Disney in terms of the actual company value themselves. I think Disney is worth every penny. I think it actually goes higher, but I think we get to 116.31, possibly before earnings. But at 116.31, that's my target. That's exactly where we started to gap up higher from their earnings in October. So that's a pretty good level to possibly look at. That was from 2 years ago. Again, more than likely will retrace there. So Disney might be on maybe on watch for some puts, as it is going to fall in sympathy due to the same sector of Netflix being entertainment or streaming entertainment. But again, just something to look for. All right, guys, we'll leave it there. Have a great rest of your afternoon. I'll catch you guys later for the morning note tomorrow, 9 a.m. Eastern Standard Time. I didn't get chosen for jury duty, so that's awesome. Just call my number and it said you can leave. So perfect. At least we don't have to worry about that again. Have a great rest of your day. We'll catch you guys tomorrow. Cheers.